Good day everyone, my topic for today is all about characteristic of the French benefit tax. Final tax, the French benefit tax is a final tax which is withheld by the employer at source, meaning the taxpayer does not need to report this income again on their tax return. The second, a tax on the French benefits of managerial or supervisory employees. That French benefit tax is not tax the employer. For sure, that French benefit provided by the employers are taxed appropriately, but the administrative and financial responsibility for this tax lies with the employer, that not the employee. The third one, paid by the employer. As a final tax, the tax presumed withheld at source and remitted by the employer to the government. In short, the employer is responsible for calculating, reporting, and paying the French benefits tax on the value of non-cash benefits provided the employees. This system ensures that such benefits are taxed similarly to legal income, promoting fairness in the tax system and preventing tax avoiding through compensation and structuring. Second to the last, gross up tax. The monetary value or the amount of French benefit realized or taken home by the employee is effectively net of the final tax, which is to withheld at source. Shortly, grossing up the French benefit ensure they are taxed similarly to cash salary, reflecting the true cost of the employer and the equivalent free tax value that would have been received by the employee in cash. This process helps maintain equity in the tax system and prevents potential tax avoidance through non-cash compensation. The last one is due quarterly. The French benefit tax is due to remittance quarterly based on the accounting period, fiscal or calendar, selected by the employer. It means that employers must make regular payments throughout the financial year, rather than paying the entire tax liability at the end of the FBT year. Procedure in computing the French benefit tax. Number 1. Monetary value refers to the taxable amount or benefits taken home or realized by the managerial or supervisory employee. The term monetary value in the context of the French benefit tax refers to the taxable amount of the benefits that employers effectively receives or realize. This is the value that can represent what their employee would have had to spend out of the pocket to receive the same benefit, and it forms the basis for calculating the FBT payable by that employer. Number 2, determine the gross up rate French benefit tax rate applicable for the taxpayer. The gross up rate is the complement of the French benefit tax rate. If the French benefit tax rate is 35%, the gross up rate is 100% less 35%, or 65% if the French benefit tax rate is 25%. The gross up rate is 75%. To determine the gross up the monetary value of the French benefit, you need to multiply the monetary value with the gross up rate, not divide. However, if you want to reverse the process, find the monetary value from the gross up value, you would divide by the gross up rate. Understand? Number 3, determine the gross up monetary value by dividing the monetary value by the gross up rate. To determine the gross up monetary value of the French benefit, you need to multiply the monetary value by the gross up rate, not divide. However, if you want to reverse the process to find the monetary value from the gross up value, you would divide by the gross up rate. Number 4, determine the French benefit tax by multiplying the French benefit tax rate to gross up monetary value, meaning the gross up factor adjusts the value of the benefit to reflect the gross income an employee would need to receive to have the same after-tax value as the benefit. Rules on valuation of French benefits. Number 1, benefits paid in cash. When benefit is given in cash or paid for in cash, the monetary value is amount paid for in cash. Shortly, benefits paid in cash are straightforward monetary payments made by the employer to an employee as a part of their compensation package. These payments are typically included in regular payroll transactions and or subject to income tax withholding and other deductions. Number 2, benefits paid in kind. When benefits are given in kind, the monetary value is the fair value of the thing given unless this book value is higher. Book value is the cost less by the provision of depreciation of depreciable properties. Shortly, instead of receiving cash payment, employees receiving goods or services that have value. Okay, number 3, benefits that are furnished. When the benefit is given in the form of free use of the employer's property, the monetary value is 50% of the rental value of the property. For example, taxable housing benefits. Employer leases a residential property for the use of his employee, and said property is the usual residence of the employee. Monetary value is 50% of the benefit. A sole proprietorship is business leases a residential house and lot for the use of his business manager for 20,000 a month. So the monetary value shall be quarterly value is 20,000 times 3 months. So equals 60,000. So the quarterly monetary value is 60,000 times 50%. Tanawa ang monetary value niya is 50%. Equals to 30%. 30,000 pesos. Another example, employer owns the residential property and assigned the same for the use of his employee and his usual place of residence, and an annual value of the benefit is 55% of whichever is higher of the zonal or assessed value of the land and improvement. So, monetary value is, again, 50% of the annual of the benefit. Example, Kimberly, etc. allowed of its use realty investment costing 3,500,000 with zonal value of 4 million, assessed value of 3 million to be used by its vice president. Sa annual depreciation value niya is 4 million times 5%. And our monetary value is 50%. Equals 200,000. Quarterly value is 200,000 divided by 4 quarters equals 50,000. Quarterly monetary value is 50,000 times 50% equals 25,000.